All right, let's jump straight into it. Where are we at? Well, it's 1 to 11, so yeah, right on the cusp of things kicking off and that. So, I mean, obviously everybody was up late, or maybe everybody was up early this morning, 4 o'clock, and that to sort of see the FOMC, and it was one of these sort of things that sort of like we knew the cut was coming. As I said, a couple of times I was in the camp, and I thought 25 base point would have been the sort of choice. But obviously they went a bit heavier and they went in with the 50 basis point cut. So look, actually, let's flip across to DXI because this is the reaction we're seeing here. So I'm going to clean these charts up a little bit because we've obviously sort of been seeing a whole bunch of stuff play out here. But this is what I was kind of really thinking we were potentially going to see with a 50 base point cut. So was the initial reaction, bang, drop down, which we can tell. I mean, we know that, like by definition, every time you cut rates, you're going to see a currency drop off. And with that, we got breakouts. Well, we got an attempted breakout and test of major resistances on Aussie. Gold got up to our price target. I got off my last gold, I think sort of, what was it, like 98, I think it was, 25.98. So right up in the top end there. But then, of course, the whole market's looking for this. You've got a 50 base point cut. What do? They jam it up the other side. So this is what we're going to be, not what we're going to be calling, this is what you call a short squeeze. And, as I said, this is partly the reason that I got rid of all my positions because I thought, look, this is a high probability that we're going to see this move here. I thought 25 base point, okay, you may have sort of seen a continued move down, which, yeah, I know it sort of seems a bit sort of contradictory because it's sort of like you're thinking, well, 50 basis point bigger than 25 basis point. But again, it's the message that it sends with it all, and also how the market is positioned for these things. And as we can see, the reversal here, very big. Little gap up today, stuffed around for a little bit in the last half hour, is just gone bang and taken off. So let's drag this across. So I've got an updated fib on this last sort of drop down here, including this little pushback here. And you can see, look, we've almost made up 78% of this drop. Well, maybe sort of 70% or so, but well above the 61% line, above all our little resistance levels that we've been sort of working off for the last couple of days. So, where are we going now? So really, we're targeting up here, getting back up to sort of 101.78, potentially, depending how long they want to squeeze this, potentially pushing it out the top side over here. Maybe you could still sort of come up along here to this sort of 103 area. It really depends. Like DXY, when it gets on a run, and particularly with these short squeezes, it can carry on for a while. It's a big market and it's hard to turn around. A lot of people have been look. I mean, look at how long this last sort of drop's been coming. Really, from I mean, it's only a couple of months, but from June here, remember we were right back up 106 and it's just been selling down, 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 down. So a lot of this position here, this is what positioning is. This is where sort of, people go, okay, cuts are coming. Let's get rid of our US dollar because it's getting weaker and weaker and weaker and weaker. And we've seen this across the board as well. So a lot of it's been done in anticipation for today, well, for last night or this morning with this FOMC, and it's culminated in a 50 basis point cut. And with that, now you're seeing a lot of people go, okay, look, I was waiting for this move. It's happened. Let's get out. Let's jump out. And that's what we've seen happen. We've seen sort of, I mean, myself included. I got rid of all my sort of positions. First time I've been flat in a long time. So yeah, look, it's not a surprise that we're seeing a bit of this reaction here. We've got the key levels that we're going to be looking for. I mean, there's a lot of sort of little resistance areas. I mean, we can even sort of see here, if we just continue this across from these lows that we had, where it's finding a bit of resistance here now. You just can't really tell with these things how long it's necessarily going to carry on for while they sort of push this back up, because you got people sort of taking profit from these sort of positions that have been building up, building up, building up. And then you've got sort of like, sort of people actually sort of thinking, look, this is a very good chance to sort of really buy it down here. And look, other people that were late to the party and go, look, 50 basis point, bang, let's short it, and waited here. they're getting squeezed out now. And this is the thing, this is what the squeeze is. It's everybody that sort of like is short and going, oh, damn, I got it wrong. Oh, I'll hold on a bit longer. I'll hold on a bit longer. I'll hold on a bit longer. And it keeps driving up and up and up and up through these things. And just, it turns the screws and it just squeezes them out of their positions to a point where they can't take it anymore, either financially or mentally or whatever. And they're out of the position. So short squeezes generally are very fast moving and they don't tend to sort of really give an option to get off. A good example of all this is if we actually go into the higher time frames and we look at sort of this is on the daily, this period through here where we got down under 100, and you can see it's really just a big one-way trade. It's not this kind of choppy kind of sort of, this is the market positioning for things. Look at this heavy, fast move down. Came down here, and then look at the resulting move up the top here. This is a perfect example of a short squeeze on a very large scale. And remember, this is, US dollar got underneath 100. This is July last year, and then just did not stop till it got up to 107 over, what's this, July to October, so 3 months or so. And that's a short squeeze on a very large thing. I'm not saying that we're going to get that again. Need to clean these charts up a bit here. But there's a high likelihood that we could see this on a smaller scale. And, we've got our levels, which are going to be levels of interest. Let's get this out of here for now. Clean it up a little bit. So we've got these levels that are going to be levels of interest. But as you can see with this, if we put it on the 1 hour here, it had this little bit of a pullback from this like sell area here, but it's very much setting up to go like this, boom, 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 and probably keep pushing forward through here. So, there's going to still be levels where we may see little sort of pushbacks and that, but it really depends how much they want to unwind this trade and how much they want to really sort of put onto people. Because remember, you got gold at it's at all-time highs. It's still above its breakout level. And this is what I was saying the other day, that, we had the price target 2,600. It hit it like, 10 cents over or something like this. It's still, from a technical standpoint, you'd want to see that retest of 25.30. So that means that, if you get the flows out of, metals and it wants to go into US dollar, or wants to go somewhere, it's going to go into US dollar as well. So, there's a lot of sort of things that support the idea that we could see a medium-term push with DXY through here. Big levels that you really want to see what's happening is around this area over here, around this 102 area, because this, remember, was that big high time frame sort of support, pretty much within a couple of cents, acted as our resistance. So it leaves us in this box at the moment, but there's no reason why this can't just continue and push up here a little bit more. With the 4 hour, we can say that these are big candles. These aren't about to sort of, see these little things of indecision. These are just like, let's hammer it up to the top side here. So look, again, I'm still a little bit reluctant. I've actually just booked in, pretty much my biggest month ever kind of thing. So, you know what I mean? And first time in a long time I've been flat on things. I'm reluctant to short things. Maybe I'll miss part of this move, and this is probably, as I said, look, this could continue for a bit. It could continue for a couple of weeks. We've got BOJ coming in a couple of days. That's going to weigh into the market a little bit as well. But there's a few sort of things that make me sort of think that this is, as I said, just a short squeeze, and then we eventually revert back to coming down to these levels over here. I think it's just people taking a little bit of pressure off their positions, booking some profit. Now we've got some certainty, because the question was there for a long time here. Are they going to cut? Are they going to cut? Is it going to be 25? Is it going to be 50? Well, now we know. So, move on. Wait for the next job data stuff to come out. Wait to sort of see what they say in relation to sort of, future cuts, as it was pretty much with it all. It's going to be data dependent. That's pretty much the stock standard sort of response that they give. So yeah, we'll wait to sort of see. But I think certainly this kind of confirms for me now, at least what I've been saying the last couple of weeks, that the shift of focus has now gone from being about sort of inflation being in the driver's seat to being the sort of, avoiding recession, so jobs and this kind of stuff in the driver's seat. And this is a very important sort of thing to be able to sort of see these things predicted and sort of notice the shift in their focus because, once their focus wasn't on potential sort of like fighting inflation anymore, well, that's the green light for the cuts to be coming. And obviously they went heavier than I thought. But I was saying yesterday, so have a quick look at the equity markets. So equity markets, as you can see, this is just the NASI. Um, it's been on a bit of a pushback up over here, hitting a sort of known resistance level with it all. But this is what I sort of thought that, like, 50 basis point wasn't going to be super bullish and super risk on and sort of see things rip up to the top side. 25 base point, I think, would have been like, okay, more money in the system, not hitting panic stations, on with the show. But I think really it's hit it a little bit to sort of say that we've, sort of like, yes, we've got the cut, but things are still on shaky grounds. And while it's on sort of shaky ground and that, I think sort of the market wants to sort of just play things a little bit safer, a little bit safer. So yes, that's where we're at with DXY. So short term here, as I said, I would expect probably for this maybe to sort of stuff around a little bit in Asia while it sort of digests it all, but I wouldn't be surprised if we sort of start to target 101, 70, high 70s, 101.80, this kind of area over here. We've seen this has been a nice little sell area for the market. So it's just, again, look, it's a matter of how far they want to squeeze this. But for me, I'm going to take it easy at the moment, but I'm going to be looking for buy opportunities at lower levels with these USD crosses. I'm not necessarily looking to sort of short US dollar at the moment. Things can change, of course. All right, flip across. We got gold. So gold came in, and this is what I was saying, hit our price target. So it's very, very nice, like sort of, particularly when you have these technical things, you run it through. We had our first price target, got taken out. We had the pullback. This was the move that I was saying. This is why I didn't want to short gold around here, because I said, look, this move here is a lot bigger than this move here. And as you can see, pulled back right to this level, and then took off and came up to the top side. Look, the move afterwards, subsequent now, I mean, it dropped $50 or so. It dropped, yeah, $53 or so from the highs. Like that's a good sell-off. But again, you're pushing into all-time high territory. So, there's no real sort of way you can gauge your risk management if you're trying to short into an all-time high. You're kind of just hoping for the best. But as I said, I think a pullback down to the sort of 23, so 25-30 level would be good as a structural thing for a breakout. I wouldn't be surprised if we sort of get down here, possibly even a little bit lower. Like these things, as I said, they're not exact sciences, but I would say this area here would be your sort of buyzone would be at 23, and then a possible overshoot down to 2500. I mean, as I said the other day, I sort of referenced this bit here. Remember the big sort of breakout here? Look at the move coming from here. We're like sort of, 23.55 to 24.82, $130. No one would have thought that was going to pull back and bang, all the way down here. So look, certainly it's a possibility that we see a continued move down here, and it all lines up. US dollar strength, gold weakness. It's typical relationship between the two. So just checking some positions. If we go here, yeah. See, and I'm just having a look over a couple of other things. See, silver's getting a whack, gold's getting a whack, Aussie's getting a whack. It's all in line with a little bit of sort of continued US dollar strength. So yeah, as I said, I wouldn't be surprised if this sort of continues a little bit higher. That's okay, because as I said, this is the plan from here, down to here, back up, down to here, back up, either or. You know what I mean? So I'm not sort of surprised by the price action. It's just a matter of sort of let it run its course. Let them sort of do their profit. Wait for these lower levels. You got a lot better risk reward trying to buy from 25.30 and for buying from 25.10 or so then obviously sort of if you're buying sort of from 25.70s, these kind of areas through here. So that's all right. We just take it easy and sort of see how the rest of the week plays out. BOJ is coming up as well, so that's also going to play into things a little bit. Flip across Aussie smash through the top side here. Did we take out that high? No, we're like sort of 4 points short of it or something, I think. Yep. So, all right. One other thing I'll just go on with gold. I go on about these things. So one of these very good reversals, and that's called um, like a high heel reversal. So basically, look, if I invert this, you'll be able to see it. And if I do some fancy sort of drawing, you've got the shoe. And then this is like a stiletto, or whatever they're called. Bang. Like a girl's high heel shoe. So basically it's a drift down, up, and then this bang bang spike like this. These are great reversals. Basically it's come up here, it's cleared all that liquidity, and then automatically bang back into where it was 2 seconds prior. And it's sort of shot back up. So these things are generally pretty strong reversals. Obviously this is inverted, so it's upside down this time. This is another thing that just sort of makes me think that okay, this is looking pretty bearish, and I'm not looking to buy it straight away. Look, I could be wrong, and it could fly back up over here. Who knows? As I said, look, I still think the ultimate trade moving forward, and particularly through to the end of the year, is to be selling US dollar. It's just a matter of what level do you sell it from, or where do you get in from? All right, Aussie. And seeing Aussie, so we've got new 4 hour candles trying to sort of just push up off the lows here. Let's clean this up a bit. So as you can see, look, it's been a great run pushing up through here. See if we can find any sort of levels, or it's a bit tricky with this. Uh, Nothing there really sort of fits. I find like picking these trends and that, I find sometimes, so just bear with us 2 seconds. Yeah. Yeah, so I find sort of like, particularly when you're picking out these like nice sort of trend lines and that, when you put the lines together, sometimes it just feels right. Like you're like, oh, is it this right, this right here? And it's just maybe it's a little bit of OCD or something coming in with it all. But this, apart from the fact that we've got a nice breakout, back test, and then rain up through the top over here, doesn't really give us a nice sort of indication. It just is a bit of a grind. And because we were sort of thinking, look, US dollar, cuts are coming, it kind of was every single dip got bought up, bought up, bought up, bought up. And it's just kind of come up. Let's get a few of these off so we can see it a bit better. It's just sort of it hasn't provided anything that we can really draw a nice clean sort of trend line on. I mean, I guess maybe you could put this part here. I'm not a big fan of this. Let's, mm, oh, maybe. I'm not a big fan of that. I suppose to a certain degree you could say you've got your sort of three touches on the bottom line here. Certainly it didn't, well, it kind of did continue up here, didn't it? Yeah, actually I might be pretty happy with that. Make you a slightly different color. I mean, this is after the fact and that, so it doesn't really sort of bode well, not bode too well, but it doesn't really sort of give us much to work on, except for the fact that what we can see is it's broken this little move up to the top side over here. Again, US dollar squeeze for a bit. I wouldn't be surprised if these sort of come back down over here. I wouldn't really be thinking this is okay. I mean, I wouldn't be thinking this is double top. I mean, technically, you've got a big top here, and you got a big top here. So, this could be, obviously, once you sort of get back down below, whoop, back down below here, that would be a double top. But I just don't think, given everything going on at the moment, this is the case. So I'm going to sort of hold fire for a little bit, see how this sort of move plays out. The fact that it did sort of hit up the top side here, and it has broken down here, means we can probably at least sort of drag out a bit of a measured move and say that's your breakdown here. Comes back in line with that previous area that we had as a sort of buy zone. So probably back down around 67 for a downside move. I'd probably be looking to buy this stuff again. So let's make you a bit smaller and down over here. Of course, you run the risk of this running away from you. That's fine. But I would say, sorry, a little bit slow this morning after not really sleeping too much. That's how we do the measured move, isn't it? You go boom, measured move. And from the break down to that buy zone. Let's get rid of these ones. So that gives you a, if this were to be the channel, which kind of seems to fit now, because particularly we got the touch up, the touch up, touch up, touch up. Yeah, that's 5 connections for this channel. Plus we've got a breakdown here. This could be potentially a buy zone if we get down to 67. I mean, it's 45 points away now. But as I said, if they decide to run DXY a little bit higher, it's not just going to be the DXY crosses that cop it. It's going to be US dollar across the board. So you're going to see a little bit of profit taking. And as you can see, look, the market said to it, I'm done up here. We got back up to the top over here. Didn't quite put in a new high, but it did get smacked down quite significantly. Again, I don't think this is going to be the one that sort of finishes it. I think this is just a broad US dollar rebalancing. I think we can really, let's get these things out of here now at that point. Actually, I've already got a fib. Let's drag this fib up over here. Yeah. So back down into 67, round number there, into a sort of bit of a buy zone. If we get back down here, I will have another decent shot at it. I mean, I could get this wrong if we move back up here. The fact that this is starting to sort of develop a little bit as a channel, you could potentially see a move up to retest and then a move down. That's also a plausible sort of play with it all, because obviously, break of the channel, you haven't had that retest kind of thing around there yet. But if we do get back down to 67, I'll be going long again and be chucking on there. But for now, as I said, I'm just going to sit. I'm not in any rush to try and really sort of predict what the outcomes are. I think there's going to be a lot of rebalancing in the market. We're seeing some early sort of sell downs, like as I said, gold, silver, Aussie all just took a whack just around 10:30 this morning. So we'll wait to sort of see what happens. But certainly if we get back down here, I'll be looking to get long again. Flip across, we got silver back into our buy zones. Bang, here we go. And this is what I was talking about the other day. Like, yes, okay, it's stuffed around. It wasn't a sort of nice, clean breakdown at all. But these are the things I'm talking about. Like, it's moving up. It's super strong, super strong, super strong. Oh, this thing's never going to sort of think, never going to stop. We had the 2 buy zones. You can see through here and here, back to this trend that we drew up before. And I told you, when a trend feels right, it just feels right. And, it clipped in there. It doesn't mean that this is done now. As I said, if we see a continued sell-off on US dollar, you could see more. But around this area here, you've got this big falling resistance. This is a back test. So you've got your breakout through this big yellow line. So I'll show it on a bigger time frame. There you go. This is a very significant falling resistance, which we've been talking about for a long time. We've pretty much got the completion of this bull flag, which came in, where's this sort of like, within, 10 cents of this level over here. We got the body fill of this drop down right online. Body fills are another thing. I'll cover them a bit more in another video. But body fills, particularly from big drops, are great targets. But yeah, so we've got this big falling resistance. We got the breakout. We got the completion of the bull flag. And now we've got a back test to the top side of this falling resistance. So this is why we have the buy zones back here. It's still at the 38% of this last drive up here, which, as we know, is a very bullish retracement. That's not to sort of say, the move's over. By no means. It's just people take a little bit of profit up over here. If they can recoup and then push through, these are your levels that are going to be major, major breakouts. You get above sort of 31.5, I would not want to be short, put it that way. So that's a bit more of the broader picture. As I said, the here and now heavily oversold in the 4 hour. It's been coming down for the last week or so. Again, I did very well. Like I got out all my silver. I have a quick sort of squeeze. I put them all up on X and that, but you know, a lot of mine up around 31 last night. So how we get on the other ones. I think I'm running a couple of accounts with it all. Um, 31. Yeah, 3102. Yeah, so yeah, all up around this area over here. I took my profits, which worked out very well for me. But beside that, as I said, look, the sell back down and that, it's not sort of a shocker. We're back into these buy zones. We've got a better risk reward here. We're at the 38%. We've got the back test. There's a lot of technicals that are lining up with this, as well as the fact that there's a lot of technicals lining up for why we sold down from this area. As I said, the completion of the thing within 10 cents. And that's just how I've happened to have drawn it. Maybe if somebody drew it from this low over here, you would have got a different level. But anyway, so yeah, we'll see how we go. I think sort of again, generally the day after these market moving, big massive market moving things, market likes to sort of digest things a little bit and may sort of take a little while. No worries. As I said, happy to sort of sit for the moment. Copper, copper still finding resistance over here. This is what I was saying yesterday. We come back down and move back up. Buyers are still moving up. Now, look, because we had this second drive here and it got smacked on the nose again, this is where the buyers are sitting or have been sitting. And so we've got to sort of think, are they going to hold this zone or are they going to let it drip and sort of come back down over here? I'm probably thinking more of the latter. As I said, US dollar push, I think that's going to see a little bit of flows come from everywhere. And this is why all these things will kind of sell down at the same time. All these flows will come from everywhere and we'll see, a bit more of a sustained pullback. So this is where the buyers were. I would say probably back down around this 420 level would be a better option right now down here. But I think certainly still up in this top zone is a plausible area for it to just sort of mill around. I mean, copper, like it's very temperamental. It's not always as impacted by US dollar as some of these other products are. So very much while everything continues to sell down, this may just sort of range. So I think the best thing for copper to do at the moment is just to range this area. And again, a close above. This is just shoring up this line more and more and more. The more we hit into it, the weaker it gets overall, but it means that the more significant it is once it breaks. So once you get a close and a break up over here and it closes here, I would say like as I say with these things, 4 hours minimum, but preferably a daily close. That's going to be your key for a hold, and that's going to be a hold, and then you move up another couple of thousand points over here. Yeah, for now, I wouldn't be surprised. Again, a little bit of pullback down here. Finish off with China, and look, it's in line with everything else. A little bit of US dollar buying off the lows. This is a very strong area, so we can pretty much move this down now. I think that was a higher time frame, maybe the 4 hour, the daily. I think I must have had that there. But look, regardless of it all, this is where they're sitting. This is where the buyers are. You want to break down to 7, you want to close underneath here. But as I say, with everything, and this is why you go over multiple charts back to back, you start to see that it's not just one flow moving around the market. You see that you particularly when you're dealing with DXY and US dollar, this flows into everything, and when it comes in and when it comes out, everything is kind of correlated and gets affected similarly. So that's pretty much it just for the charts and that. Let's have a quick look at the news. I don't think there was too much going through the end of the week. Where we are Thursday. Let's refresh this one. Aussie unemployment coming out here. So let's see what they do with the numbers on this because, as we know, the last couple of times you can see 58,000 is what they came out with, and the prediction there was also 26,000. Well, 26,000 this time, but last time as well was in the mid 20s. All right. Anyway, I'm going to pay attention to this. All right. I thought I'd just sort of come back on board for 2 seconds. 47.5. Look, and this is what I was saying. They just spam 20,000, 30,000, 20,000, 20,000. You're just plain wrong. Look at the numbers that they're coming in at every month. I mean, how many times do you have to sort of just spam it at 20,000? Just admit, look, you know what? We're pumping on jobs. I mean, look, we added 47,500. America added like 100,000. They've got 300 million, we've got 28 million. So, I mean, equivalency sort of like, would be sort of, as I said, like, what, like 3,000 or something. It's been a bit early for me. But look, divide the population by 10. So divide the thing, yeah. So the equivalent would be if we're adding 10,000 jobs for their 100,000. So this is why when people sort of go, look, RBA is going to be sort of cutting rates and they're going to be cutting rates by the end of the year. This is the data that you need to look at because our inflation is not what the US has got. We're sort of 3.4, 3.5, they're 2.6. Their unemployment, their employment, so NFP for them is sort of being added at an extremely low rate compared to what Australia is adding here. And then again, if you look over here as well, you've got the rates of the central banks. US is at 5 now after a 5 cut. Aussie's at 4.35. We're still 65 base point lower than them, with inflation running higher. Like, I'm sorry, to me, it just doesn't line up that that's the sort of recipe to cut rates. As much as sort of people go, well, oh, look what happened in the US. That's it. They've got different conditions, and as well, their housing market and the way that people take home loans, that's also different. And you need to consider these things when you sort of make an assumption as to sort of whether we're going to see a cut by the end of the year. I mean, look, anything could happen. I just don't think it's set to do it at the moment. Anyway, uh, following news, we got BOJ tomorrow. Sorry, as I said, look, comes whatever random time. And for me, that's about it. We got a bit of Canada data out tomorrow night, but that's not really going to affect things so much with themselves. We've also got so BOE tonight. That's obviously a big one as well. 5%, and they are looking to hold. So if we see a bit of a shock on this one, you might see some action, but generally BOE doesn't really affect the market as a broad sense too much outside the pound. All right, that's it from me.